Good afternoon and welcome to our Learn at Lunch webinar series, the October 3rd, 2017 edition. Um, we'll be posting a link to the chat box down in the lower right-hand corner where you can find more e-farm management information and find recordings of the previous webinars that we have held in this series. I would like to thank the Farm Service Agency for their support in the form of a grant that has been crucial to assisting with the development of our e-farm management resources and to bringing you this webinar series. Today we have as our speaker Dr. Kim Anderson, and I'm sure that all of us, including myself, are looking forward to Dr. Anderson telling us when we'll get back to profitable higher levels of grain prices. So with that, I'll turn it over to you, Dr. Anderson.
Uh, Thank you, Dr. Jones, better known as Rodney. Hey, how's the canola planting going? Rodney,
Yeah, no, I muted my mic, but I'm back on just for your information. Since Sunday morning, we've planted 1,000 acres of canola. It's going in really well, but it's going to come to an end about tonight when this rain moves in.
all right. Now that we got the real world, okay. I've I've I had spent the last 2.5 days, really the last couple weeks, looking at the change in world agriculture production around the world, exports around the world, and doing that relative to U.S. agriculture and U.S. Exports. Because if we get back to better prices, it's going to be because we are active and we are successful in the export market. And so, I was putting together a presentation, and I sent an email a couple of weeks ago saying that I wanted to talk about, will developing countries replace U.S. agriculture? And then I read the announcement last night that said I was going to talk about prices. So I threw in about 4 or 5 overheads here to cover that in the next minute or two. And then I think it's more important to know what's going out in the world and what impacts that's going to have on our Oklahoma producers. So with your, I started to say with your permission, I'd proceed to do that, but since I got the mic, hang on for the ride. If you look at corn, corn prices are in the tank with the December contract wallering down around $3.50. It's been down in this level since late 2014. There is no sign that corn prices are going to recover anytime soon. I think there's some problems in the corn market in that there was a larger than the historical average of carryover stocks in corn held by producers. I know the ethanol plants I read where they have told producers they do not want old crop corn at the ethanol plants. That means that old crop corn that's in commercial or on farm storage is going to have to move in the feed market. That's going to, in my opinion, help keep corn prices low. And that's also going to help keep wheat prices low because, as you know, we've got a lot of wheat in bunkers that needs to move in the feed market with low corn prices, which I don't see any relief for in the near future. So that's going to keep our feed wheat in the bunkers. If you look at the soybean market, or I got 2 of them, I think. Yeah, if you look at the soybean market, it's been lower down in the late 15s and 16s. It's recovered a little bit from there. Relative to price levels, soybeans is in better condition. It's still above cost of production for most producers. Soybeans has been not a big money crop, but at least it has remained profitable, and it looks like that it will remain profitable are at least in this on the board the $9 to $10 level. It could work higher as if we get the export demand as we go on throughout the year. If you look at the hard red spring wheat, that's the bright picture in the wheat market. You've got the futures price at 616. You've got a positive basis for 15, 16 protein, a hard red spring wheat up to a dollar and a half basis. So hard red spring wheat prices are high because of a shortage of protein around the world, and I think will remain at these relatively high levels compared to the soft red winter wheat or hard red winter wheat. Durum wheat prices are also relatively good. If you look at the hard red winter wheat, they've been wallering down around this $3.70 to got up above $5 for just a little while right after harvest. With the massive stocks that we've got in the United States and around the world, with the high production of wheat around the world, I don't see much help in the wheat market. If you look at what the Oklahoma market is offering for 2018 harvested wheat, it's right at $4, and that's using the July 18 wheat contract at $4.90. 90 cent under basis. I know some areas it's $1 or a little more under that $4.90. In other areas it's down around the minus 80 cents. So what I'm saying is that I don't see much room for improvement for our crop prices in the near future. If you're looking at Oklahoma, I'm looking at December wheat in Oklahoma around 380. If you're looking at June of 18, the market's offering about $4. I think if we have protein around 3.5 in Oklahoma and test weight, that we could see $4.50 wheat. Any questions on prices? Okay, I'm going to get into the meat of this thing, and I want to start out with the world wheat situation. Now, first off, let me say that I don't see the United States losing its export market or its power, its place in the export market for soybeans or for corn or for cotton or those commodities. I have seen, and I want to show you the changes in the world wheat situation and the United States, and especially Oklahoma's position in the world wheat market. Now, looking at world production, you go back to 08 where we had a record crop 09, a record crop 10. We had a short crop at 24, 11. You go down through there looking at the world production, and it has gone from, really, if you go back to 8 and 9, 22 billion bushels to 27.4 to 27.7 billion bushels. So a big increase in production over the last 7 or 8 years. If you look at consumption, it was at 24.1 billion bushels in 10. It has increased to 27.1 in 17. So you've had an increase in consumption along with the increase in production. However, what we saw is like in 10, in 11, and in 12, we saw consumption either above or even with production. So production in 12 was 800 million bushels below consumption, and that's when we had our good wheat prices. But in 13, we had an excess of 700 million bushels, 900 million in 14, 800 million in 15, 600 million in 16, and 300 million in 17, for a 2.4 billion bushel excess in production. since starting in 2000, really more than that in 2013, because we had to make up that 900 million that we were under in 10 and 12. So in this period, we increase our ending stocks from about 7.2 billion bushels to a record 9.7 billion bushels. Now my question to you, or my presentation to you, is where this production came from and what its impact was on exports and export demand. If you look at world harvested acres over this time period, it's really been flat for the last 10, 20 years, but since the early 2000s, we did have an increase. If the arrow here starts in 2010, this is 10. We had a short crop, relatively good crop in 11, short crop in 12. There was slightly lower harvested acres, and then we've had an increase in harvested acres as we went through 13, 14, 15, 16, and then down a little bit in 17. So we've had some increase in harvested acres over this time period, but it's a small percentage. Now I overlaid the harvested acres here with the black line, which is the world's average bushel per acre, or the world's average yield. You go back to 1960, that was right at 17 bushels, and in 17 is projected to be 50 bushels per acre on average yield. Now, you look at Oklahoma, our average yield this year is 33. If you look at over the last 10 years, our average is 29. So you look at world's I don't really want to say efficiency, but if your cost of production is $200 an acre and you're dividing it by 30, it's a lot higher than if you're dividing it by 50. Also, if you look at world production, you go back to 1960, it was just under 10 billion bushels, and this year, of course, 27.4 is where it is. So you've had a straight line increase in yield per acre, you've had a straight line increase in production, and the majority of this increase in production has been in yield, not in harvested acres. If you look at the United States as a percentage of world production over this time period, you see it ranged from 12 to 16% until we got into the mid-80s. And then it's been a steady decline now to this year is just above 6% of world production. So if you look at what's been going on the last 20, 30 years, 20 years, 10 years, however you want to look at it, the United States production, wheat production as a percentage of the world has been declining. That means our presence in the world is declining. If you look at some selected countries going back to 1987, so about 30 years back, you can see most everybody was flat until you get into the early 2000s. You've got the United States in red. Of these countries, and these are hard wheat producing countries, Russia, US, Australia, Ukraine, and Argentina. These are our major competitors for Oklahoma's wheat. You'll see that we were the highest producer of wheat until we got out here into the mid to late 2000s, and then Russia started competing with us. And in the last few years, Russia, as a single country, now this is exporting countries. Now China produces, the European Union produces more, India produces more than Russia, but Russia's about number 4 and we've been about number 5. But the point here is Russian production has increased from about 1.5 billion up to 3 billion bushels, almost doubled in the last 6 or 7 years, while U.S. production has stayed around 2.1 billion and just above 1.7 billion this year. If you look at Australia, the green line here, it has increased just a little bit since 2010, just slightly higher than the mid 2000s here, and they are having problems with the crop this year. If you look at the Ukraine, which is the red line down here. You've seen an increase in production in Ukraine. Argentina has been relatively flat with an increase in the last couple of years since they removed that tax. So where's our production coming from? Well, it's coming from former Soviet Union countries. It's coming from China. It's coming from India. It's coming from the European Union. But let's look at exports. That's where we make our money, is exporting. We go back to 1987-98 marketing year. Now, these are your hard wheat producing countries. These are Oklahoma's export competition. So you got U.S., and this is all wheat, at 48%. In other words, 1987, the United States had 48% of the world's export market. Argentina 4, Australia 11, Canada 26, Kazakhstan 8, Russia 1 and 2. Now this is the percentage of these 1, 2, 3, 4, 5, 6, 7, 8 countries. So it's not total exports, it's the exports of these 8 countries. If we look at going to 07, we see that the United States is down to 38%, Argentina's at 12, Australia at 8, Canada at 18, Kazakhstan at 9, Russia at 14, and Ukraine's at 1%. And now let's increase it 10 years. We see that the United States in the last 10 years has went from 38% to 21%, which is a 17% decline. You've got Argentina has lost 3%, going from 12 to 9. Australia has increased 3%, going from 12 to 15. Canada is down 1, or about even, from 18 to 17. Kazakhstan is down 4%, going from 9 to 5. Russia is up 8%, going from 14 to 22%. Ukraine is up 10%, going from 1% to 10%. So if you look at the increases here, it's basically in the former Soviet Union countries with a major decline in exports. In other words, a 17% decline in exports by the United States. Now, if you add, and I'm just going to put everybody else, going back to 2007, called Other, so you've still got those 8 hard wheat producing countries, plus the European Union over here at 7%. So if you add UN in the EU 28 at 7% and Other at 43%, that means that non-hard wheat producing countries in 07 exported 50% of all exports, and they were at 43 and 7. Now, if you come to present, Other is up to 48. The EU is up to 9%. So the point I want to make with these 2 pie charts is that the EU is a major player, that the EU has increased exports along with the former Soviet Union countries, but other countries, your small developing countries, have increased exports and have worked themselves into the export markets. Looking at some select countries, what I want to point out here is that world exports have increased 2.9 billion bushels. Of that, former Soviet Union countries, Russia, Ukraine, Belarus is exporting this year, takes 2 billion of that 2.9. The European Union, 500 million of that 2. So between the former Soviet Union and the EU, which is mostly your developing countries in the EU, have picked up almost all of that 2.9% there in the exports. So the moral of the story here is the United States, specifically hard red winter wheat exports, as a percentage of the world's exports, have declined dramatically. Total U.S. exports this year of world exports, see, production is down 17% from what it was 10 years ago. We're still a major player. However, if the it wouldn't be difficult to replace us if we weren't in the world market. I just throw in this monthly price chart, and you look at, we prices peaked out in October of 12, and have been declining into middle 16, came up just a little bit. There's really not much reason for wheat prices to increase. We really need them above $6. But with our massive stocks, there's just not much reason for that to happen. Now I want to get specific here to Oklahoma. I know I'm going to talk about U.S. here, but I'm going to build into this. You've got U.S. production. You can see that basically it's been declining over the last 7 years. And I can throw this into a 10-year deal, and you'll see about the same thing. You know that our production, our average is 2.1. Last year's 2.3 billion, a 1.7 billion bushel crop. The U.S. average price is expected to increase from 390 to 460. I think that'll come down before we get to the end of the year, but it's basically because of that high hard spring wheat price and your durum price. It's not because of soft red winter or hard red winter wheat prices, but we'll look at that in just a minute. If you look at hard red winter, the average 885 million bushels, our production down to 758, down from a billion last year. So we're below average. We're well below last year. And as you know, our prices maybe increased just a little bit, but not much. If you look at the ending stocks on hard red winter, down from 555 million to 448, it's still well above average, and you'd expect us to have significantly higher price. Now, Oklahoma's average prices, when we had our ending stocks here at 500, 6.25, 699, 7. Man, this is where we really like it. This year, 345 for 16, and for 17, we're looking at somewhere around $3.80. Now, I want you to look at these prices. If you look at the U.S. average price in 10 of 570 and the average Oklahoma at 506, a 64-cent under price. Now here you had 19 cents, and 12 you had about 20 cents, and 13 we were above the U.S. average, and 14 above the U.S. average, right near the average in 15. What was the situation in 10? We had poor quality wheat in the bin. We had a very poor crop. We didn't have a test weight. We didn't have protein. It's a poor milling quality wheat, and it reflected in the Oklahoma price. In 16, a 390 for the United States average, ours 345, 45 cents. What was wrong with the 16 crop? 52, 53 pound test wheat. In 17, we're going to be, I've got us 80 cents below the U.S. average. Why? We did have test weight this year, but we had 10.8 protein. I want to point out from this slide is the necessity to produce a quality product. We're short on protein this year. In 16, we were short on test weight. You got to have a full product. You've got to have test weight above 58, really above 59. You got to have protein really up around 11.5. You got to have low dockage and low foreign material. And I think that's reflected in this this supply and demand table here. If you look at the world situation over the same time period, I just point this out, and you can relate prices to what's going on around the world in Oklahoma. Now the question is, what's it going to take to get this price, this $3.60 price, up to near $5? And what I think you need is we got to have lower world stocks. And so as we look out to 2007 and 18, what's world production? we've already seen U.S. production at 1.7 billion, and it didn't do us very much good. I mean, 15 cents maybe price-wise. What's got to happen to get this price up to the $5 range? Well, you got to get world ending stocks down here around 8. With the increased consumption, I think we got to have higher stocks, and so we around 8.5. So if you go into 18, if you have a 26 billion bushel crop, let's put consumption at 27 billion. The ending stocks down around 8.7. That may be a little lower than that, I think. And if you have an Oklahoma wheat crop that's 59 pounds or better test weight, that's 11.5 or better protein, I think we can have $5.50 Oklahoma wheat prices. But what you've got to have is a product that we can get out on the export market, and to do that, those contracts are have to be 12% protein or better. If you look at the protein premium, this is the last one that was in Milling and Baking News. Ordinary is a -2. That's would be 10.8, 10.9 protein wheat at 11.70 premium. At 12%, you got $1.33 premium, and at 12.5, you got $1.60. Now, local elevators do not test for protein. However, if a region has protein, the market will bid up the basis, and you go back to it takes a village. Well, it takes an area to produce protein, and we've got 2 crops left for harvest. That's Argentina and Australia. In other words, there's nobody out there to produce. There's a shortage of protein in the world. There's nobody out there to increase the protein between now and next June in the export market. And these protein premiums, the odds of being there are extremely high. So I think one way to get our price up is to produce protein, but protein by itself is not sufficient. You've also got to have test weight. But my point is that this is going to be there. Also, notice that $1.60 premium for 12.5% protein. Okay, right now, Russia will load out a vessel in the Black Sea region for $191 per ton, or $5.20 a bushel. Your ocean freight from the Black Sea ports to Houston's about 70 cents a bushel. That means I can bring in 12, and Russia's loading out 12.5 protein wheat. I can bring in Russian 12.5 protein wheat into Houston for $5.90 on the vessel. Looking at the Kansas City market, you can buy 12.5 protein wheat in Kansas City for $6. If you look at hard red spring wheat, 12.5% protein in North Dakota, you can buy it for $5.85. That means if I'm ADM milling in Enid, if I'm Shawnee milling or O'Kane milling, and I need some 12.5 protein wheat to blend with Oklahoma's 10.8 protein wheat that you can buy for $3.80 plus, say, 30 cents in and out at the elevator, so you can buy for $4.10. But the protein's too low for my milling. I can buy Russian wheat right now. It's about as cheap as I can get it anywhere in the United States. Now I'm asking you, how are we going to compete in the export market? Is our developing countries, Russia, Ukraine, Kazakhstan, Eastern European countries, are they taking the U.S. wheat market? And my answer to you is an unequivocally yes, they are. I read this week that in 1978, in the former Soviet Union, Russia harvested 78 million acres of wheat. They're looking at harvesting 60 this year. In the next 5 years, they're saying they'll bring that other 18 million acres into production. So in summary, Oklahoma is sitting in a very precarious situation when it comes to wheat. We've got millions of bushels of wheat in the bin and in bunkers that, well, it's, in my opinion, is mostly feed quality wheat. We've got wheat in the bin that's a good test weight, that's low protein. For Oklahoma's wheat price to recover into the $5 or better level to get above cost of production, we're going to have to produce a milling quality wheat and an exportable wheat. We can compete, and producers in Oklahoma will compete in the future. The other point is that with the increased production in Ukraine, in Russia, in Eastern Europe, in other developing countries, well, let's put it this way. Last year, France lost their wheat crop, and the European crop was well below average, and we did not get a price increase out of it. This year, Australia's wheat crop is going to be 30 to 35% below last year, and we're not getting a price increase out of it. With the wider area of wheat production, it is more difficult to get a significant loss in world wheat production. I'd like to paint a rosy picture on this, but I just wanted to provide you some food for thought. I'm open for questions or comments.
Thank you, Kim, for that very, very uplifting message. Not. Um, one question for you just to think about as we're wrapping up, and I would encourage any of the participants on the webinar to type any questions in the chat box that you have for Dr. Anderson. But while I'm wrapping up here, Kim, you might think about just what are some strategies that a producer can use to get through these lower price times, and it does kind of look like barring some kind of a production glitch somewhere in the world. We are in an era of lower prices for a little while. So think about that and come back and answer that if you would. Normally at this point in time, we post a link down in the chat box where participants can go to fill out a couple of questions. We value your feedback on these webinars, and we've gotten some really good responses and some really good insights from those short surveys that we've done on past webinars. I was negligent in my duties in that I did not get the information from Brent to facilitate doing that survey for this particular webinar. So we still would like your feedback, and if you have any feedback that you'd like to provide us regarding this particular webinar or the webinar series in general, email any of us. I've put my email down there in the chat box, and just let us know what you think. With that, I'm going to let Kim come back and maybe give a thought or two on what a producer can do to get through these lower priced times, and then we'll wrap up. Kim, any thoughts?
Yes, with current prices, there are producers in this state that can compete in this market and that will compete in this market. Now, the first thing, Oklahoma, we do have our domestic millers. We're fortunate to have ADM, Shawnee, O'King, millers in Fort Worth and Wichita, Texas, Amarillo, we do have other markets beside the export market. But the world will buy our wheat. We have producers that do crop rotation, producers that have management practices so that their average production is not 29 or 30 bushels per acre. It's closer to 45, 50, 55 bushels an acre. They'll probably do crop rotation. I know that the staff in plant and soil sciences, the researchers and extension people they're aware of this situation. They're doing research and they're coming up with new management practices for fertilizer applications and soil conservation and for crop rotation. I think we've got to put together full production and management practices to compete. We will lose acres of wheat production, the marginal acres, but the good producer, I don't want to say good, the producers who are producing above average yield with below average cost will remain in the system and will compete.
Thank you, Kim. And again, just a few more seconds here for people to type in any questions they have. I would like to remind the participants that we are kind of on a schedule here, at least for a while. Every couple weeks, we're going to do another webinar at lunch, and the next one will be October 17th, where we'll be talking about evaluating options for change, kind of what Dr. Anderson was just talking about. And then again on October 31st, 2 weeks after that, we'll be talking about best production practices. And then in November, our 2 webinars in November are going to focus on some opportunities for some of our smaller acreage producers as we talk about what's realistic on, say, 50 acres or so for either a crop producer or somebody who has a little bit of pasture that they want to make some use of. So those are the webinars that we have coming up here in the near future. And with that, I'd like to thank everyone for attending, and goodbye until next time. Thank you very much.